Here's your money briefing for Friday, September 8th. I'm J.R. Whalen for the Wall Street Journal. Health insurance costs are expected to rise 6.5% or more next year, the largest increase in years. Wall Street Journal reporter Anna Wilde Mathews is here to discuss. So, Anna, why is such a large increase happening now, and what's causing these rates to rise so much?
Well, partly it's a sort of delayed reaction to the inflation that we've been seeing all over the economy for a few years now. Hospitals and other healthcare providers have seen their own costs going up over the last few years, particularly for nurses and other staffing. And they want to pass that along to health insurers in the form of higher rates paid to the hospitals. But their contracts with health insurers typically run over a few years, often 3. So they had to wait until those contracts came up for renegotiation to come in and say, hey, we need a big increase to cover our increased costs. So it's a little bit of a domino effect that moved a little more slowly in this portion of the economy, but now really is kicking in. Another big driver is the cost of drugs, which is something I think all consumers, all listeners are aware of at this point. The emergence of new specialty medications that can be very efficacious but often come with a really high price tag. And one particularly important category there is the diabetes and weight loss drugs known as GLP-1s. So that's Wegovy and Ozempic and Mounjaro, which have shown to be very effective but are also in high demand and are not cheap.
How about people that didn't go to the doctor or go for checkups during the pandemic and now they're back in the habit of doing that? Is that contributing to this as well?
There's a bit of that, but honestly, what I heard from experts is that the bigger drivers here are more the rising prices for healthcare, the inflationary pressures, and it's not driven so much by utilization, as they call it, although there is some of that, some rebound, and maybe, unfortunately, some people discovering things that they didn't discover a few years ago when they were supposed to get that mammogram or colonoscopy.
So who's going to be affected by these price increases?
So we're primarily talking about employers, employer-provided insurance, private insurance. We're not talking about government programs like Medicare and Medicaid. So that affects employers, and it also affects their workers who often pay a portion of the premium or the premium equivalent out of their paychecks and also, of course, often face out-of-pocket charges such as deductibles.
And for companies, the amount they ask employees to contribute to their health insurance coverage is in many cases a significant piece of their benefits package. How is this likely to change that math?
It depends on the employer. There's a huge variety as workers, as everybody knows, having probably seen different amounts come out of their paycheck depending on where they're working. But what I heard is that although employers might increase the share of the premium that the employees pay by a little bit, in general, they're not making big changes there because there is still tightness in the labor market in a lot of sectors, and a lot of employers are not wanting to do anything to their benefits package that would make it less appealing to new hires or to people they have now who might have other opportunities. But that said, if you're paying a certain percentage of the premium and the overall cost of the insurance goes up, even if your employer does not increase the share that you're paying, the amount that you're paying goes up because it's the same percentage but of a larger total.
When will these higher costs go into effect?
Well, it does depend. The predictions that we were looking at in this story are really about 2024, and a lot of employers are on a sort of calendar year pattern with their health plans so that it would kick in 1/1 of 24. And you see that because a lot of people have open enrollment right now in the fall, picking or at least learning about their health package for next year on 1/1. That said, a good share of employers are on different cycles, so some have already moved into their 2024 health package, and maybe it started like July 1st or some other time, but a lot of them will see things starting 1/1 of 24.
And they could be surprised by some of the numbers they see.
Well, it'll vary a lot. That's one thing to keep in mind. We're reporting here on averages. It depends hugely on what type of health plan your employer has. It might depend on where you are in the country or what's going on with the hospital systems in your area. For instance, since a big driver of this appears to be higher rates that the hospital systems are achieving, if the big system in your town has not renegotiated their contract yet, you may not see it yet.
And what does this mean for people with health insurance under the Affordable Care Act?
So we do have an analysis from KFF, which is a nonprofit health research entity, and they were showing increases of about 6% on average for next year, and that would come on top of increases of about 7% this year. It is driven by some of the same factors as the employer market sees, sort of inflationary pressures from the providers and from the cost of drugs, but maybe to some degree it kicked in a little earlier in that market. That market also has other factors that can increase it.
That's Wall Street Journal reporter Anna Wilde Mathews. And that's it for your Money Briefing. Today's show is produced by Ariana Osperu. I'm your host, J.R. Whalen. Our supervising producer is Melanie Roy. Aisha Al-Muslim is our development producer. Scott Salloway and Chris Zinsley are our deputy editors. And Philana Patterson is the Wall Street Journal's head of news audio. We'll be back with a new show on Monday morning. Thanks for listening.